My sound quality is good. I think, are we live? Do you know? Normally I see
We
like
are
this,
live.
like we're live. Okay, good. Maybe we're live.
Yeah, we're live.
Got it. We're live with we're live with Real Fridays. Couldn't get any more real than this. Trying to get all the technical difficulties to get LinkedIn going and get StreamYard connected to LinkedIn, and I had to do that a couple of different times for some reason. So I appreciate obviously your patience and the patience of those who are waiting to come on. And we're still waiting on Jeremy, so he's on Detroit time, which is both expected but this time I have to take blame for it. Okay, good. I just got the notification from LinkedIn that we are live, which is good.
Excellent.
No, what an incredible week! It's been such an incredible week, and I think that the IMB conference I think was a really good conference with some good content. I wanted to cover some of that again here on Real Fridays, and I'm buying a little bit of time for Jeremy, but
yeah, we have Jeremy Potter, who's up on stage there with Mark from Silk Title. Some other
I even said that Jeremy Potter and others said the same, that he makes Title look sexy again. I think that Jeremy's innovation, I think, takes something as mundane and boring as legal search in title and title insurance, actually something where innovation can take place and provide the efficiencies that are necessary both to lower costs and to just streamline the process, because there's really no reason to delay a closing or to delay an insurance binder to get issued on a title transaction any longer than a few seconds, let alone waiting a few days for an insurance policy to get issued. So I love how Jeremy can really dive into certain technical aspects of the workflow and actually say that there's something here, that there's an opportunity for improvement for the mortgage lender, the consumer, and the realtor, and all those sort of involved.
Yeah, no doubt. There he is.
Let's go Tigers. Well, I could see he finally got a good microphone. Maybe let's hope his internet connection is as good as his microphone. Although
it's not. The microphone's better than the internet connection.
Your microphone's amazing, but it's literally, I never thought I could ever say this about anything, but it's as big as your head almost. Like,
I know, right?
No, I mean,
it's a matter of perception, but nothing's as big as my head.
Now you only have the haircut that adds like 2 inches to your head. You had that one for a minute that added like 6 inches. Yeah,
I know. Everyone thought I got taller. They're like, "How are you still growing at 40?"
6 inches is everything these days. So let's go with this. Look, I was just talking about how, and I really mean this. I really actually did enjoy your, the panel or the title session that you did at the conference. What was your takeaways from that conversation? Would you say? Let's start with you as the moderator and facilitator and one who was adding, I think, a lot of innovation around title in your consulting gigs.
It's nice of you to say. I mean, I think title insurance for me is something that was largely overlooked in lending for a really, really long time. And when I speak to people in the title industry, when I speak to boards of companies in the title industry, my go-to is always to say, like, hey, there's a good reason why. It doesn't have to be, it doesn't always have to be like we're under threat and nobody understands us and we feel persecuted or attacked by all sides. I think there's some of that in every segment of our industry right now. But with title, it actually was born out of a good thing, which is title was so good at their job, nobody ever had to look behind the curtain. Anytime a real estate agent said, where is this? What's going on? Anytime a loan officer said, where is this? What's going on? Title's response for 25 years was just, I'll take care of it. I got it. I'll take care of it. I got it. But what occurred was then generation after generation of referral partners never actually understood what was happening behind the curtain. It was just, oh, they'll take care of it. Oh, they'll take care of it. And
definitely not.
Really good service providers.
Even still, my title knowledge is a little shaky, having been on many sides of this. Yeah.
And I think people think it's because it is boring. I get it. Like, no doubt title insurance is boring. But like the thing is, but the reason it was so unknown was just because they were so good at what they just took care of everything. You didn't have to see the mess. You didn't have to see how the sausage got made. And then all of a sudden, the curtain started to get pulled back. There were scrutiny and transparency around technology and fees. Well, that scrutiny and transparency is a good thing. because that challenges the industry to say, here's why we're valuable, here's why we're important. But we have to start opening the curtain and sharing that with the rest of the platform. Otherwise, it is just always going to be confusing. It's always going to be threatened. So to me, Rick, the first thing that we wanted to do in 15 minutes, because you only have 15 minutes at Housing Wire to make that point, the first thing we wanted to do was basically be like, here's what you need to know. Lenders, you should start caring now. You didn't have to care before, and we get it. For good reason, you didn't have to care. You got to start caring now because Fannie Mae cares, because the CFPB is looking at junk fees. So you got to get good as a CMB CEO, excuse me, as an IMB CEO, who might also be a CMB if you're into that. That you got to start understanding, because you're going to get asked. You're going to get asked about coverage. You're going to get asked about risk. You're going to get asked about costs, and you weren't before, but you are now. And so that was my first number one thing I was trying to do, was just get the need to know headline in front of the IMB folks.
Well, what do you think the biggest, it's curious that like title has become the area to begin. Is it largely because, I mean, it's the least amount of money, obviously, within the value chain. Like the mortgage company makes significantly more. The real estate agency obviously makes significantly more. And yet we zero in on a very small financial piece of the transaction. Is it a function of, it's just the lowest hanging fruit that's the easiest thing to change? Is it a function of, is there a time effort? If we clean this up, how much time is saved during the transaction and being able to close and issue the insurance binder on it? Like why title? Like why that space? Because it seems like it's also the most complicated piece to clean up, because, you know, there's all these municipalities, and, you know, you're dealing with different registry of deeds and municipalities across the United States. So it seems like it's a very complicated, is the juice worth the squeeze? In other words, like if we provide all these efficiencies, we're going to save, what, a few $100?
I'd frame it another way. I would actually take you all the way back to LO Comp. And I'd be like, okay, LO Comp said we need transparency and disclosure, and brokers are capped at no more than 3%. And then we went to lead gen, POS types of scrutiny. How much are you paying for leads? Where are you getting them from? I think lead gen got scrutinized quickly after LO Comp. Then we got to appraisal, and we went through about 3 or 4 years of appraisal getting scrutinized. Why are you so slow? Why does it cost so much? Are you really allowed to charge the rush fees you're charging? Can we get some more standardization? And we did appraisal modernization at the GSEs. I actually think title's now having their turn rather than being singled out. It's just gotten that we've gotten through a lot of the other fees and a lot of the other pieces, and title's largely flown under the radar from threats of technology or threats of fees, because it was just a fulfillment service for so long. And then to your second piece, do I think this is worth the effort? I do, in large part because while it is running about 1 to 1.5% of the home value, which is very different than 6% commissions on the real estate side and this and that, it's actually something that is addressable, meaning it's not as fluffy as a number as other compensation packages are. You can actually see, what does it cost to search an exam? What does it cost to do the curative work quickly? And I think speed does matter for 2 reasons. Lenders used to blame, real estate agents used to blame title and appraisal as the 2 slowest pieces. We don't control them. They take forever. What if somebody finds something? Then we got to fix it. So I think it removes excuses. The reason it's the juice is worth the squeeze for the industry, the reason the juice is worth the squeeze for me as a person working on it, innovator, is because it removes excuses from the lender. If you remove title as a roadblock, now what's your excuse that you can't close in 10 days? Why can't you close in 10 days? Stop blaming title. It's not title's fault anymore.
Yeah, I'm feeling slightly called out by that, because that's a really good point. There's been many business models tried and failed, blaming those, tried and succeeded in small pockets, but said in other states it wouldn't work, or in other counties it wouldn't work, or what have you. The prop tech like rush in like 2017 through 2020, like everyone blamed title for ruining their transactions. So yeah, fair enough.
What would, if you started your own mortgage company, Jeremy, someone wrote you a $10 million check and say, look, do mortgages differently, how would you do title differently? If you could do it really in any way that you can, from, let's say you had all the money to mitigate the risk necessary, how would you do it? Like from a workflow standpoint? How would you go about that?
So I'm just going to warn you, I'm preparing a little bit here. You see me distracted because my cat is going to inevitably enter the picture here. So I'm going to apologize in advance, but he's too annoying to keep out. So whatever. This is just the joys
What's your
of
cat's
working.
name? What kind of cat is it?
This cat is named Samson. And Samson, it goes by Sam. I sometimes call him Stilts. I'm not a big, everyone who knows me knows this. I'm not a big cat guy, but we have 3 in the house because my wife and daughter are. So I have to deal with it. That's part of making your family happy.
Correct.
So anyway,
Is it a
back to your
mean
question.
cat? Like to
What's that?
strangers? Is it a mean cat to strangers?
No. Really kind of skittish. Will hide for a couple hours. Like if you came over to watch football, the cat will hide for like 4 hours, but then maybe get you at the last 30 minutes, like be in your lap type of thing. This one.
Nice.
Is,
Okay.
yeah.
Well, that's not mean. I mean, that's
No.
yeah.
Yeah. So back to your question. I actually think
Yeah.
title should be the seller's problem in a purchase. I think the seller is the one selling the house. So if I had my perfect world, the way you were describing it, I had my perfect platform, I'd actually have the house prepped and ready for lending, ready for sale with things that can be done proactively. And title is one of those things. There are parts of the country, not the majority of the country yet, but there are parts of the country where the seller picks title because they do the title and they clear it. Parts of Florida would be a good example of that. We've long accepted that the buyer should take the risk, pay the fees, and clear the title. But there are very few asset classes where the seller's allowed to just sell something and be like, well, you better get insurance because I might not own it. You can't auction off a wine collection. You can't auction off art. You can't auction off a classic car and be like, you better get title insurance because I might not own this car. My grandfather might own it or somebody else might own it. It's like you have to say to the platform that you're selling on, I own this. And I think that is the biggest change I would make if I had a magic wand, which would be make the sellers pay for title
Say
insurance.
for the transfer, all the transfer taxes, the transfer title, and the title insurance.
Yeah, because, well, I think there are closing costs like transfer tax that states are still going to collect no matter what and can be part of the closing costs. But I'm saying, like, as far as like getting the work done so it's not a delay, I want to get the work done so it's not a delay.
Yeah, I mean the payment, like all.
So it's really about delay.
Most of these payments end up a little bit fungible. I mean, the real estate commissions are classic, like a little bit fungible between the sides, right? But yeah, in terms of like the burden of like the effort and the proof, you think that should be on the seller for sure. That makes sense.
Why wouldn't, like, would there be like a compliance issue or a RESPA issue if, let's say we have a REALFridays mortgage LLC, we've just raised, $50 million bucks, so money's not an issue, and we go to we target an MSA, we target a neighborhood in Detroit or in Michigan, and we say to we go ahead and every active listing that's actively listed on the MLS, we go ahead and we order title and we order the appraisal on every single one of those, right? And then why wouldn't we, if we bought that in advance and then we just marketed it to realtors to say, look, this is done. We have the realtor in place. We have the title insurance in place. We just need a family to assign it to, right?
Yep.
Post-transaction. And it's just a function of just send us the consumers, because there is no time. Like, we could close this loan in 11 days. Appraisal's already done. Title's already done. We assign it to, the consumer at closing. The insurance binder's sort of prepackaged. Is that feasible from a legal standpoint? Is that feasible from an incentive standpoint to say, send us your deals, this is already done?
I think so, because it to me, and you've heard me say this before off camera, it acts as a pre-approval. And we do have pre-inspections happening all over the country, right? You can get a pre-inspection of a listing in San Francisco, for example, where the seller will pre-inspect the house. But if we have sellers performing those services, I think buyers and lenders won't trust them just from a data integrity issue. But I do not believe it would be a RESPA issue. I do not believe that it would be a compliance issue for the lender. These processes that you're talking about, title and appraisal in particular, have all been set up to be independent services. And the GSEs have acknowledged that. So if I'm using an appraisal firm that's GSE compliant and I'm ordering it through them, what's the point of an AMC if not to ensure independence? That's the whole idea. So I'm actually using the AMC model and the GSE model to say you can do this upfront. We choose not to for a variety of historical reasons, but you could go into a neighborhood and you could appraise every single house. And the only place where you might lose money a tiny bit is if that goes all cash and there isn't a true appraisal report needed. Now, the buyer may still want to buy it for a discounted rate or something because they're interested and they want it for part of the home profile. HomeBot or CoreLogic or Black Knight might still buy it on an all cash deal anyway. So you still have a valuable piece of data, but you wouldn't be able to collect fees at closing for that appraisal if it went all cash. What you would, but everybody else, wait, these are independent services by licensed professionals, and you just transfer the appraisal into the name. Now, there's a bunch of people watching this who are going to be like, whoa, whoa, whoa. You have to put a name on it. It has to be after the 1003. It has to have this. It has to have that. Those things are not entirely true. And so what I mean by that is the TPO channel transfers appraisals all the time. like it is not uncommon for a broker to move an application and then ask for an appraisal. And they do.
Mortgage bankers do that too.
Mortgage bankers do it too. This would just be using that process proactively instead of reactively. So that would be my advice, would be, or actually I shouldn't even say advice. This is what I want to work on. Like this is the stuff I'm thinking about.
So who do you think, because it seems like other than cash as the big barrier for a lender to go ahead and do that on an MSA by MSA basis, who do you think would be the best candidate to actually make that investment? Large servicers?
I actually think it's interesting you mentioned large servicers. I think I'll get to them in a second. To me, it's a platform where the in-house mortgage solution is affiliated with the real estate solution. Because if you read the public disclosures from the ones that are public, Zillow, Redfin, others, parts of Rocket, you'll see they don't do a great job converting leads. And I don't think that the Weikerts and the Howard Hannas of the world are public companies, so you can't see their disclosures. But like the best in the world, the Prosperity mortgages with the Berkshire Hathaway flags, the best are at like 18% conversion. So I would go to them first.
To actually invert the process as we're saying it.
They'd be my first one.
And for conversion there, you mean from getting a lead to taking it all the way through to origination?
Taking it through to closing, meaning the leads are coming into those platforms. Those brands or agents are pushing them to other lenders, or they're choosing other lenders because there isn't a great differentiator.
So you're baking together like conversion of the actual deal and attachment to the captive lender. Both.
Yeah, because that lender can come in and put, I mean, the way I've always imagined it is I'm putting a certification icon on my listing platform. So what we know happens is every real estate agent, every buyer's agent sets up a saved search for your area that you're shopping in. And the first thing you get as a home shopper after you engage with an agent is a saved search of the MLS or IDX listing feed or whatever. I'm saying, wouldn't it be powerful if that came with the, and by the way, the mortgage shop on the other side of the house has already taken a look at this property and we're good to go, right? And Rick, here's why I'm so excited about this. I'm so excited about it because I believe, now this is my product manager brain talking, and everyone remember when you're a product manager, you got to set the vision as well as the roadmap. And the vision here is I actually believe financing is more reliable than cash in 2025, and we just haven't acknowledged it or owned it yet. And what I mean by that is cash buyers are wealthier and they're getting more and more wealthy. Like the top of the market's going one direction, the bottom of the market's going another. We know this. There's income disparity and the rich are getting richer. However, they're also getting more sophisticated and more complicated in their finances. Their money is all over the place. It's in multiple accounts. It's in multiple asset classes. And when they want to buy a house cash, it is not as simple as just, I have $1 million in an account, I'll wire it over. It is, I need a bunch of days to get all my finances in line so that I can get that $1 million to the escrow to settle for cash. I actually think that there are a handful of the top 20 lenders. There's a fraction of the top 20 lenders where financing is more reliable and faster than cash. But we keep screwing around with these timelines and we keep doing everything reactive. We keep reacting instead of being proactive. And we should be able to go out to a real estate platform, whether you're affiliated or not, but if you are affiliated, even more, and say, if you do this right, if you inspect the house properly and you do day one certainty, we are better than cash.
Well, I think
Find us-
yeah. I
By
mean,
the
I think
way,
there's different types of cash there, right? Like the privately wealthy individual buying the vacation home probably looks like what we imagined cash looking like when we thought cash was better. But when it's, I won't say too much. I won't say too much here. But if you're a prop tech company with a very complicated capital stack that's buying hundreds of homes per month, or a SFR holder that's buying thousands of homes per month, yeah, that capital stack is super complicated, much more than getting a 30-year fixed mortgage.
and by the way, the big lenders, the repeat players, are sending cash to the closing table all day, every day, nationwide, in every jurisdiction. So they know how to do it.
Yeah.
And we're this is why title and closing is so important. We're seeing the more you work with the same platform, the more you work with the same provider, it's even faster. It's even better because you're integrated and you have all these other tools. So, Rick, you and I have talked for now going over a decade about how people discriminate against FHA, VA, and USDA loans because of the perception that you have to go. The perception is you have to go cash, conventional, govy. And the reality is the government should pat us on the back if we can take those govy clients and make them be as competitive or more competitive than cash. So if you talk about the compliance here, if I'm doing something with the house and I'm doing something on my platform that just made an FHA client more attractive than cash, haven't I done the job the CFPB wants me doing? Isn't that the whole idea of the CFPB? And I just did it. I just did it. And now I'm saying did it in theory because we're talking in theory. But like, I guess the reason you asked the question was to get me all fired up, and it worked. But the bottom line is like, I'm going to go do it. We got to go do it. We have to. Otherwise, we'll be irrelevant. The mortgage
this is where
totally irrelevant if we don't start thinking this way.
Well, this is where it gets interesting as far as how we can sort of turn the hourglass of the mortgage process upside down. And I think that lenders have sort of flirted with this halfway in that, like NAF has their NAF cash program. There was what was it? Redbird, Bluebird. What was it? What was the program that that Easy Knock bought that was in disarray? Ribbon. So there's a concept of acquiring the home first with their cash, charge a point or so, leverage their cash for a period of time, knowing that for 30 or 60 days, the property will eventually, the lender will become whole, right? So in some ways, fronting the cash was one small innovation around it, but I think that it's just dipping the toe into the water of being able to invert the workflow of the mortgage itself. Because once you get rid of the appraisal, in title timelines, you save 10 days. I mean, that's at least 10 days.
Well, let's take a step back to like, well, what won't happen, but theoretically what could happen. When Google wanted to do Google Maps, they sent literal cars with rotating cameras on every street in America. Like, talk about ambitious. That was ridiculous. Like, if you said that to most investors and you said that to most people in any industry, real estate especially, we're going to send a Toyota Prius with a rotating camera on its roof to drive every street in America. Everybody would be like, what? But they knew if they did it, and if they did it right, there would be billions upon billions of dollars in click-throughs for a variety of different channels, for all kinds of different use cases. And they did it. And what I'm saying is, you could easily do that with appraisals. You could easily do that with inspections. You could have a warehouse of inspections. You could have a warehouse of appraisals. We're not going to do that. It's too sophisticated. It's too problematic from like a capital perspective. And so what you're saying is, how do we do the next best thing? We do the next best thing with listings, because listings are a subset that you can actually manage, and they already have a professional unlocking the house. So I would say, like, in terms of like knowable data, these things are all knowable, and we just need access, and we just need the real estate agent industry to care about the downstream effects of some of these services and And now we do. Now they do. Because now we're being crushed together. We're being forced together by regulation and lawsuits and expectations and technology. And so now it's the timing's finally right. And it hasn't been until now.
We've gotten some interesting comments from LinkedIn that are trickling in here from Mike Cush and Adam Merrill. So Mike made a good point here just now that Relo has done a lot of these processes for decades. That's I don't know if that's true of specifically the title piece, but that definitely is true of lining up all the different parts all at once and getting everything kind of pre-baked. But that's because the corporate entities my understanding of that process has always been that the corporate entities dramatically overpay for that service. And, this is a little known fact, actually. NewZip's original business name when it was first founded was Relo, the alternate spelling, because the concept was bring the Relo experience to every real estate transaction. So it's something that we've dug into quite a bit, but I didn't know exactly Mike's comment there, but it makes a lot of sense.
What was Adam's
for everyone?
Ways for mortgage? What was this? What's this mean? Ways for mortgage quotes identify the fastest route or the gas saving route instantly. That's an interesting. That's an interesting analogy.
Get the fastest mortgage, and then you can compare cost versus speed or something. That sounds right up your alley, Potter.
I know. Well, I think that's also a great comment because it is a logistics problem. You have to move data in real time, valuable data, and you have to move it in real time so people can take action on it. So I think it's a very good comp in just the data logistics aspect of it because it's a highly localized thing. This car is moving through the world in real time, and you got to get data to that car also in real time, and you got to coordinate it with all the other data coming in. It's not a it's actually
there's some distance where cash is slower, right? That's what Waze could tell you. Cash is slower than
in this case.
Than getting it.
Yeah, that's right.
Yeah,
that's right. So I think these are exciting things to discuss. I mean, I think one of the things that I took away from the housing summit, the IMB summit, Rick, to your original question, was I've been in enough rooms with the same people talking about it, and it's time to take action. So I think my biggest takeaway was like, I really like the people that got together. I really like the crowd that was there. The fact that I got to be on stage was I was grateful to be there. I was excited to be on stage. And I think it was a lot of the right people that I got to see and talk to. But I also think it just felt to me, and you kind of sensed this a bit, I bet, when we were together in Dallas, because you could see I was getting a little agitated, which was like, I've just been saying it for so long. It's like time to do it.
Well, it's kind of interesting that I think the urgency can meet the cash, or the demand can meet the cash supply, right? I had a meeting with a pretty large servicer, top 10 servicer this week, and they're not in retail at all, right? But I should say they have a small consumer direct platform that just basically focuses on their own servicing portfolio and their own runoff type thing. But they've or to prevent runoff, but they specifically have invested on, just like a lot of these servicers, massive amounts of servicing to build their book to go after that for purchase and refinance transactions moving forward. And their whole premise is saying, like, look, Rick, we are so much faster at being able to connect with the consumer. Our technology is so much better. Our connection to the consumer is so much better that we will get the purchase transaction. It hasn't been our trend. It hasn't been our track record. But what we want to do is build out a retail platform and then basically add this as part of our value proposition to say, look, we have several $100 billion in servicing, and we're going to essentially Uberize that, assign that to Brock as the loan officer that's in New York City or whatever, or Jeremy that's in Michigan as our retail LO, and and drive both purchase and refinance transactions to those respective loan officers. And so to some degree, these guys have cash. I mean, they have hundreds of millions of dollars in cash in the bank, and they could literally do what it is that we're talking about here as far as inverting this process, and being able to drive it, saying, hey, you get a little notification. Hey, you got to pay your mortgage this month. It's October. Pay your mortgage this month. So I pay it. And then through different algorithmic analyses, they send me a notification to say, hey, we get the hint that you're looking at maybe doing a cash out refi, or we get the hint of, based on your digital footprint, both maybe online or in your financial records or in your purchasing transactions on B of A, through reading my spending behavior, that you're gonna get an investment property, or that you're gonna put your house in the market. You're too eerily common, right? And so if that's true, we've already bought the appraisal on a home in your zip codes, every single one, and we've ordered title on the in every home in that zip code, so that just go ahead and hit like get mortgage now to claim your closing experience, and we could have this closed in 9 days.
Mm-hmm. Do I think that's going to happen? Yes. Do I think it could go even a little step further? Here's where I would do it. Because I came from the compliance side and I'm always thinking about data, I just don't understand why no one has a program. Like, why don't I just offer my entire book? Hey, click here and agree, consent, join, whatever you want to call it, to being part of our service platform, and call it whatever you want. But I would think of it as like, we'll tell you what you have available at any given moment if you're part of the program. And what it means to be part of the program is we're doing a quarterly check-in on your credit availability based on all the attributes and data that you just rattled off, Rick. Those are the right ones.
Well, you already have that access as a servicer. You can check someone's credit anytime you want.
You have it for a business purpose.
Yeah.
And people use it for that business purpose, as well as remarketing and retargeting. But the reason people don't go further around customizing that offer or making it a real offer of credit is because they're not allowed without further consent. They're allowed to do check-ins like escrow analysis. They're allowed to make sure you're not going delinquent.
Well, dude, isn't that just a TCPA kind of thing where the consumer opts in?
It's literally just a click. It's a click of a button, and they don't ask because they don't want to, because they have a 20-year-old perception of what consumers will or won't consent to. Yeah. And I'm telling you, what I'm bringing in here is I'm telling everyone who's listening, consumers would love to consent. They are happy to consent when you show them actual value. When you show them bullshit offers, they don't consent because they can sense it's bullshit. Yeah. So like, that's the biggest thing, is people aren't trusting that they can actually deliver. And because they don't believe they can actually deliver, they never make the actual valuable thing. Yeah. And then they go, well, consumers won't consent. It's like, no, consumers won't consent because you don't trust yourself. Yeah. If you just trusted yourself, you could get consumers to consent all day. Look at what we do to Google. Look at what we do with Meta. Look at what we do with Apple. It's ridiculous to think that if you don't deliver real value, people wouldn't subscribe to your platform.
That's why Rocket's acquisition of Truebill was so genius, because now you have access to all the transactional data. How many times I go to Starbucks every month? How many times I go to Home Depot? And all of a sudden, I'm going to Home Depot a whole bunch, and there's statistics around, I'm going to put in $7,000 in a home before I sell it. I'm going to buy sod, and I'm going to buy, dirt and a new lawnmower and paint and whatever else. And if all of a sudden they start doing transactional analysis of where I'm shopping and maybe even what it is I'm buying, all of a sudden that digital footprint around the highest probability that you're going to sell, or you're going to do something, you're going to Airbnb this, you're going to do something, they're going to be able to transact that data. So the integrations are there. It's a matter, like, I think to your point, it is a mindset to say, like, look, you are so close to being able to acceptably embrace this data and be able to deliver real value and not just bullshit.
A couple of years ago, everyone was, and this is when I was sitting at Rocket, as was Jeremy, everyone was trying to sell that life event data to servicers and whatever, which was honestly pretty smart, right? Where there were all the different fun acronyms of diapers and diamonds and deaths and whatever, divorces. There's 5 or 6 Ds, I think. But yeah, Rocket Money or FinLocker or any really Plaid-enabled fintech, where I'm friends with a few other fintech founders that have products that do similar things and should partner with the mortgage ecosystem but haven't yet. You can go 100 times further than just life events. Yeah.
Yep.
So I wanted to work Michael Kelleher, who's been a big fan of the show, and also having a show of his own that we're not going to mention because we don't want to drive traffic to his way. But I think homeowners consenting to have pre-approved home as an asset to Zillow is the best bet. Problem is there are already a top 30 lender, so everyone will fight it, including realtors. Yeah, Zillow's in a pickle. It's so interesting how they play so many sides of the game. It's like they're playing chess with themselves, and they just have to determine which pawn of their own goes down, or which piece on the board goes down, and which side wins. That's really interesting. In putting it in mortgage terms, a lot of these servicers are correspondents. A lot of these servicers have wholesale platforms. And so when these servicers enter in the retail game, they're going to be competing against multiple channels of their own business, right? Yeah. And my advice to them has been just go ahead and do it. Like it's okay. You know, if you provide
the writing's so clearly on the wall, like let's just call a spade a spade.
Yeah. Look at I'm definitely going to highlight this comment by Mr. Kelleher that Dr. Rick is extremely intelligent when it comes to understanding this show's audience. I love it. Thank you, Michael. I appreciate you. And I'm not sure what Adam was talking about, a pickle.
You said put him in a pickle. It said that Zillow's in a pickle. So pickle Rick.
Well. Wait, is that
that'll be the name of Rick's spin-off podcast?
That's a spin-off podcast.
Oh,
pickle show.
There.
Yeah.
No, but you know, I remember when Spencer went in the direction when he was CEO of Zillow, and when he went down the path, I think one of the last things he did is go down the path of buying a mortgage company and going on that side of it. And his point was like, look, this is something we just have to do. This is, you know, it might cannibalize in the short term, but in the longer term, we're going to be much better off. And talking about a guy who was right.
I mean, the way I see that,
way better off being a mortgage lender. Don't you agree?
He cannibalized his existing revenue pretty dramatically. Even as recently as a year or two ago, it was like over 80% of their revenue was coming from real estate agents buying the leads. But yeah, I mean, I kind of generally believe, I don't know about you, Jeremy, that they kind of had to head that way. They had such unique access and such unique audience building that it would have had to be a really deep strategic partnership with a mortgage company, which they may or may not have explored pretty deeply.
I mean, they're at $2 billion in revenue, 10% year over year from last year to this year. I mean, I would say that their revenue now is right around 2020 levels at 2.1 billion.
They did the hardest thing you could do, which is consumer top of mind, consumer top of wallet, consumer first click. Like the fact that people just organically type Zillow.com into a URL browser regularly at the pace of 220 million a month. Like they did the thing that was like the hardest thing to do. They became the category king. What your point is well made, which is to then use that to sell leads to realtors, created a situation where it became very difficult to then claw back. You know, they have this like hub and spoke model that is really strong and getting stronger, but they had a very difficult time deciding how to risk what, when, to create the true super app that they're claiming they have. I like to talk about it like the scene in Indiana Jones where he's trying to grab the idol and put on the bag of sand before the trap.
It's such a brilliant analogy.
They are trying to do that right now. They're trying to do that right now, and we'll see whether they're successful.
Dude, that's incredible. No, but I would say it's kind of worked for them, right? I mean, I'm looking at the chart now. I mean, we look at it. Are you seeing it right now? Or am I?
We can see your screen. We can see your Gmail. What else you got in there?
No, can you see the key Zillow financials?
No, we're looking at the NBA chart of the week.
Oh, that is so weird. Where is that's not what I wanted here.
We know you're a big fan of the chart of the week, though.
And then I know, right? It probably
I have,
relevant. I don't know.
I have like one more minute here, so I think you should show the Zillow stuff, and we should get into it. But I gotta run. But this was great. Thanks for setting me down. That I didn't expect to jump into like the way the world should look today, but
no, I wanted to because it's hard to make title an attractive subject that keeps people in seats at a conference, especially. And I think you did a great job doing that. And people had mentioned that. They said like, title's kind of interesting, and Jeremy made it interesting. And I equated that to making title sexy again.
I think
But
we can bring all this together. I mean, I think it can, to Brock's earlier point, it doesn't have to be the thorn in the side. It can actually be, an offense as well as a defense. So,
yeah. Well, good. Well, no, look, I think this was a good episode, and a shout out to you guys. It was good. I'm going to mix up what I get from Blended Sense in some of the footage that we can post on social, because it's so seldom that we're together, and it was nice to be together to be able to talk to it.
I can't wait to see it. Thank you. Yeah,
yeah,
that was
of
great.
course. And I'm just glad to have you here, Jeremy. You've been AWOL a couple times. We've been
And now
questioning
here we are,
commitment to the industry
traveling
and the
like
professionalism.
crazy.
So
it's nice to be in Detroit and not on
Yeah,
the
great
road.
seeing you guys this week. Thanks for all the
Good to see
comments,
you too.
everyone here. It might be our most commented episode.
Right
No,
on. Well, sounds
absolutely.
great.
Good. Thank you, guys. Appreciate you,
See you
Brock.
soon. Have a
Take
great
care,
weekend.
man.
See you guys.
Bye.
Have a good weekend.